Well, welcome back to Finance Uncut. On today's episode, is the dollar about to collapse? So there's been a lot of geopolitical events happening around the world of late, which I'm sure you're probably well aware of, but perhaps there's some that you're not aware of, and that's what we're going to explore in this video, where I believe we're seeing the beginning of the end of the petrodollar and perhaps even the US dollar as the global reserve currency. Now, before we get to that, let's cut to a clip of the real bond king, billionaire Jeff Gundlach, on the US dollar.
Welcome back to Yahoo Finance Live. I'm Julia LaRoche, and we're having a fascinating discussion with DoubleLine Capital founder and CEO Jeffrey Gundlach. Jeffrey, you're just making a point about your strongest conviction on the future of the U.S. dollar. I want to explore this a bit further and help our viewers understand what some of the longer-term implications of this might mean, especially for the standing of the U.S. globally.
Well, the U.S. has enjoyed the status of sole reserve currency globally for decades, and it's an incredible benefit. We also have the biggest military in the world, which is kind of goes hand in glove with being a reserve currency, I think. But in the aftermath of the lockdowns and the pandemic that continues to wear on, the strongest economy in the world by far has been the Chinese economy. And the U.S. economy has bounced back with a lot of consumption. A lot of that consumption is going to China. It's one of the reasons China has such a strong economy. So what we're seeing is the United States is starting to fall behind in economic growth. That's not a new thing. That's been going on for a generation, the U.S. falling behind. But the Chinese economy is growing so rapidly that the estimates as to when the Chinese economy will be the largest in the world keep getting pulled forward. 20 years ago, it was thought to be 2050, the Chinese would be bigger than the US, and that was 2040. And now the estimates are maybe it's in the 2020s, maybe even 2028, the Chinese economy gets bigger. And China's made no secret of the fact that they want to be a global player and have at least a seat at the table of global reserve currency status. And they're spending like crazy on military, and have also made no secret of the fact that they want their military to be dominant, maybe the biggest in the world. Also, they have huge savings in China. They have a culture of savings. They sort of the gold medalists of saving historically. And so when you put all those things together with the U.S. growing debt like crazy, we have debt to GDP that is fueling the majority of our so-called economic growth. So is it really economic growth when you borrow money or print money, send checks to people who turn around and buy goods on Amazon in addition to maybe paying down debt and speculating, and these goods come in from China? So we're running our economy in a way that is almost like we're not interested in maintaining global reserve currency status or the largest military or global, call it superiority or control. And so as long as we continue to run these policies and we're running them more and more aggressively, we're not pulling back on them in any way. We are looking at a roadmap that is clearly headed towards the US dollar losing its sole reserve currency status. And I feel that as long as we run these policies, it's almost certain that that's going to happen. And because of that, the dollar should be going down. The value of the dollar is so high because we enjoy global reserve currency status, and we don't really respect it enough. We take it for granted, I guess. We seem to take a lot of things for granted these days in the United States relative to how we thought about things in prior decades and generations. And I believe that we're setting the stage for us to, unfortunately, I use the word enjoy. I guess that's an experience, I suppose I should say, the consequences of our actions, the way we've been running a non-serious economic program now for really since 1980, but it's really accelerated so much in the past decade, and there's no signs of it abating. So that's the reason why the dollar is going to go down, and it's already peaked. I mean, it peaked at the Dixie index at 103. There was a double top in January of 2017, and then right after the pandemic hit. And now we're living down about 10% lower. And I believe the dollar is going to take out the lows of the past down cycle. See, the dollar has been in a series of declining highs for decades. It goes back to the 80s. And for that reason, I think when we get to the next break to the lower level, the dollar is going to go past the most recent low of around 80 and even take out the low of 70. So I think there's easily 25% downside in the US dollar. And with stocks so overvalued versus historical metrics, it means that other stocks, for US based investors, buying stocks in foreign currencies, right now I prefer the euro, ultimately will be emerging markets, maybe starting next year. That's going to be the place to be.
Historian Niall Ferguson on why the end of America's empire won't be peaceful, and what else he has to say about inflation.
Well, there's also the problem that, like generals, they tend to fight the last crisis. A good example of this is that in the minds of policymakers last spring, the spring of 2020 rather, there was a tendency to think, this looks like a financial crisis, therefore we should respond to it the way we responded to the financial crisis. And it was kind of hard to explain to people that a pandemic has a completely different dynamic from a financial crisis, that recovery from it would be more rapid, because unlike after the financial crisis, when households and banks' balance sheets were terribly impaired, coming out of the pandemic, particularly in the United States, balance sheets were extraordinarily strong. And so you have the phenomenon of this very rapid V-shaped recovery, which has only slightly been dampened by the Delta variant. And we're now into a new set of problems, which economists have been talking about really since February, when Larry Summers wrote his piece warning of overheating. We're having a debate about inflation. So what's interesting about disasters is that one can lead to another. You can go from a public health disaster to a fiscal, monetary and potentially inflationary disaster. It's not such a big disaster, it doesn't kill people, but an inflation lift-off would be a problem.
I listened to Joe Stiglitz, who agrees with the Fed. I spoke to Joe yesterday, who agrees with the Fed policy at the moment, thinks their prescription for the economy is spot on as well. His former student at Yale in '67, Janet Yellen, agrees with the Federal Reserve, her former workplace, that actually things are contained and it's transitory. You're saying we have got an inflationary problem?
Well, I actually have quite an open mind on this, but it's worth pointing out that Ken Rogoff just this week has published a piece saying just the opposite, that we might well find ourselves in some version of the 1970s. So there's a hot and ongoing debate about whether inflation is going to be transitory and how long is transitory. At what point do expectations fundamentally shift, especially if the Federal Reserve is telling people we have changed our inflation targeting regime and we don't mind if inflation goes above target for a while. My sense is that we're not heading for the 1970s, but we could be rerunning the late 1960s, when famously the Fed chair then, McChesney Martin, lost control of inflation expectations. People forget that the inflation of the 1970s had its origins in the late 60s. And so I think it's too early to say with great confidence, Jay Powell is right, inflation is transitory, it's not a problem. My sense is that, if anything, the Delta variants made life a bit easier for the Fed by slightly cooling things down after a period earlier in the summer when it seemed as if the US economy really was red hot.
I could talk to you for ages about that as well, and about how I think some of you economists, Ken and you on one side and Joe on the others and the other side, you've got your mindsets and your intellectual space, haven't you?
I'm an historian, economic historian, and I've learned not to get involved in these fights between economists. What history tells us is, this is an important point, that the big inflations in history have nearly always been associated with war. And at the end of doom, I point out that the thing that really would de-anchor inflation expectations would be if this Cold War, which is how I describe it, between the United States and China, escalated into a hot war, say over Taiwan.
And coming in from RT, Russia and China expanding yuan share in mutual trade, pushing out US dollar, Chinese ambassador to Russia said. The agreement has been reached between Gazprom Neft, which operates 34 airports in China, and China's national jet fuel operator, after a lengthy period of talks regarding a move away from making payments in US dollars. This is the first time, however, for the Russian-Chinese aviation fuel business to transfer payments to national currencies. According to Zhukov, test settlements in yuan and rubles showed an additional economic effect. Zhukov also said his company and the Chinese operator plan to double total volumes of aircraft fueling both in Russia and China to some 250,000 tons by 2025. The total volume of Gazprom Neft aircraft fueling stations in China increased to 56.5 thousand tons in the first half of 2021, 12% higher than the same period last year and 29% higher than in 2019. Coming in from Reuters, Saudi Deputy Minister of Defense signs military cooperation agreement between the Kingdom and Russia, aimed at developing areas of joint military cooperation between the two countries. So my question is, are we seeing the beginning of the end of the petrodollar? So in a nutshell, prior to the 24th of August, when they signed this agreement, the USA actually had an agreement with Saudi Arabia, which is basically the petrodollar. That oil that comes from Saudi Arabia could only be sold to the world in US dollars, and in exchange for that, the US would protect Saudi Arabia with military force. Now they've signed this agreement. Think about Afghanistan. Now, that's about 1,500 kilometers from Saudi Arabia. So when the US recently pulled out of Afghanistan, which, funny enough, is right on 50 years since Nixon took the US dollar off the gold standard or closed the gold window, the Saudis realized that the US were no longer there to protect them with military force. So effectively, this deal had to be done between Saudi Arabia and Russia. So Russia, being a massive military presence, seems to be going to provide that military protection behind Saudi Arabia, which is one of the richest, countries in the world with huge oil reserves. So I don't know. Is this the beginning of the end of the petrodollar? I think so. I also think we are seeing the beginning of the end of the US dollar. So what is the petrodollar? Well, let's have a look at Investopedia. So what are petrodollars? Petrodollars are US dollars paid to an oil exporting country for the sale of the commodity. Put simply, the petrodollar system is an exchange of oil for US dollars between countries that buy oil and those that produce it. So petrodollars are US dollars paid to an oil exporting country for the sale of oil, or simply an exchange of oil for US dollars. Petrodollars are the primary source of revenue for many OPEC members and other oil exporters. Because they are denominated in US dollars, the purchasing power of petrodollars relies on the value of the US dollar. When the greenback falls, petrodollars do too. The petrodollar came to prominence during the oil crisis of the 1970s and regained traction in the early part of the 2000s. The petrodollar system creates surpluses which lead to large US dollar reserves for oil exporters, which need to be recycled, meaning they can be channeled into domestic consumption and investment, used to lend to other countries, or be invested back in the United States. And with this new agreement between Saudi Arabia and Russia, I believe we're seeing the beginning of the end of the petrodollar. Now, I'll put a link in the description to this article by Jim Rickards on the Daily Reckoning website entitled The Great Dollar Paradox, where Jim argues that not just the US dollar, but all fiat currencies will collapse, and that we will likely have gold as some sort of new monetary system. So it'll play some sort of role. He argues that's why central banks own gold. Anyway, it's a really good article. I'll put a link in the description below. And central banks maintain interest in gold in July. And you can see here that the net purchases in July remain positive. So once again, more evidence of central banks purchasing gold. So are we about to see the end of the petrodollar? Are we seeing the end of the petrodollar? And are we going to see the end of the US dollar as the global reserve currency? I think so. In my opinion, I think so. But what do you guys think? What do you guys think? What do you guys think? That's what we do on this channel. We think. We really do think. So are we seeing the beginning of the end for the petrodollar and the US dollar as the global reserve currency? In my opinion, I think we are seeing the beginning of the end. Are we going to go back to some kind of commodity money, a gold standard or a silver standard or a bimetallic standard? I don't think we are. I think we're going to see central banks move to central bank digital currencies, which is still a form of fiat currency, probably backed by nothing. There is talk that the Beijing, with their digital yuan, will be backed by gold, and that they have a desire to have the yuan as the global reserve currency. I guess we can see that with their Belt and Road programs and the influence that they're trying to have across the globe. Where does Russia fit into this? Look, I think we will have a lot of difficult times ahead. But either way, we are seeing central banks buying gold. We are seeing Palantir buy gold. We are seeing firms now are buying gold. Big investors, billionaires who have never, ever owned gold before are buying gold. We are certainly living in interesting times, and in my opinion, gold and silver just make sense as an investment class. When I look around, we've got artificially low interest rates, we've got bonds in the biggest bubble ever, we've got real estate in a big bubble, we've got the stock markets in a big bubble. The only thing that's not in a bubble is gold and silver. The only thing that is an analog store of wealth is gold and silver. And the way the world is moving with digital currencies and digital IDs and digital you-know-whats, I think gold and silver is a great investment to have. But anyway, that's my opinion. What do you guys think? Love to see your thoughts and opinions in the comments below. If you like the video, don't forget to hit that like button. If you haven't yet subscribed, do so and hit that notification bell. Until next time, take care everyone, and I'll see you again on another episode of Finance Uncut.